What's up, traders? In today's video, I'll be performing a market forecast on Nasdaq using smart money concepts. So stay tuned. Now, it's been about 3 weeks since the last market forecast video, which I uploaded on the 25th of September. If you haven't already, definitely go check that video out first before watching this video, just to catch yourself up on what we've been looking at and what we're thinking for Nasdaq. Okay, now we're going to dive straight into the analysis here, and we're going to start off on the weekly chart. And as you can see, price action ended up reaching our target of 10676.2. Not only did price action reach that target, but you can actually see that price action is respecting that target with this particular candle closing, all right, this particular candle closing just above the 10676.2 level before giving us a really nice strong bullish reaction. What we can do now is we can go ahead and we can mark this out as a valid break of structure to the downside. Here on the weekly chart, we can also mark out this high as our new lower high, which in turn becomes our new potential strong high in here. And why do I say that? I say this is our new potential strong high because this high is what led to the break of structure in here. Okay, now before we mark out this as our new week low, I want to firstly, very tentatively, I just want to mark this out as a floating low. Now, the reason I'm marking this out or regarding this as a floating low for now is because this particular low has not been confirmed yet, and I'll show you why on the daily chart in just a second. But essentially what we've now seen on the weekly chart is we've seen a nice break of structure to the downside. We are seeing price action interacting with that initial target that we had set at 106.7.2. And what we can now anticipate, if this particular level is to hold, is we can anticipate some kind of bullish retracement in here. Okay, so essentially that's what we're looking at here now on the weekly chart of Nasdaq. And one more thing that we can do as well is we can mark this out. We can mark out our premium and discount, keeping in mind, however, that this is a floating low. Now, if we drop down to the daily chart, what we can see is that we have that bearish weekly break of structure in here, which is giving us this potential leg. Now, the reason I am tentatively regarding this as a floating low and not marking it out as a weak low just yet is because here on the daily chart, we have not seen a change of character yet to confirm this weekly low. Now, you may be asking yourself, well, where do we want to see that change of character occur? Well, we can see that we have the first part of our change of character. We have the break to the downside, but we have not seen the break to the upside just yet. And therefore, this is tentatively regarded as a new lower low, tentatively regarded as a new week low on this particular weekly bearish leg here. All right, so what I want to do is I want to go ahead and mark out my daily change of character in here, and I know that once price action pushes past this particular level in here, then my weekly low is confirmed, and then I can comfortably say that I have a new bearish weekly leg in here, and then I can mark this out as my week low as well. All right, now what happens if price action does not break above here? What if price action comes in, let's say it mitigates a supply zone in here before continuing down? If that happens, then you know that this is not your confirmed low. Okay, and then you're going to have to wait for price action to pull back up again and form that new low, right? This happens a lot, and that's why having that change of character in your arsenal is just something that helps confirm your bearish or bullish legs. Okay, so on the daily chart, we're waiting to see this particular change of character to occur. Now, if that change of character occurs and we have an established weekly bearish leg in here, okay, then essentially what we're going to be anticipating is we're going to be anticipating price action to pull back towards premium pricing once again, and we're going to wait for a mitigation of a high probability zone before price action continues. Now, if you watched last week's or the video that we posted 3 weeks ago, you'll notice these two daily supply zones that formed after price action stopped just shy of mitigating this one. But you can see that these two zones were never really mitigated again. This one was almost mitigated, but price action stopped just short, and then it formed another new daily zone in here, right? So from a daily point of view, what we would like to see is we'll exceed price action pull back, potentially mitigate this particular zone before rolling over, right? There is a possibility that it could push through this zone and tap into this one. However, I would say that price action stopping short just here might give us a little bit more of an indication that this is the zone that we need to focus on. We can see that it's a valid zone. We have the engulfing candle, we have the break of structure, which is going to be a lot clearer on the 4-hour chart, which we'll look at in a minute. And we also have that large imbalance. All we now need to wait for, we just need to wait for a little bit more liquidity to build, right? So from a daily point of view, that's what we want to see on Nasdaq. We want to see that bullish pullback in towards premium pricing of this potential bearish weekly leg before price action continues down. Now, this is encouraging, all right? This is encouraging because that particular trade, that particular idea, that particular bias is in line with what we are seeing on the weekly chart. Remember, on the weekly chart, we are seeing price action respecting this 10,676.2 level. We've seen this large bullish engulfing candle, which is showing us that bullish reaction. So we can anticipate a bit more bullishness to enter the market, which is in line with what we're seeing on the daily chart as well. We obviously know that once we see this change of character, it confirms this low, and then we can quite comfortably look to trade this as a high probability supply zone that sits within premium pricing. Okay, now to end off the video, we're going to look at the 4-hour very quickly, and I want to draw your attention to something very, very interesting. Okay, now as you know, multi-time frame analysis, within that daily bearishness, we had some really nice 4-hour bearish legs that formed as well. The first one was in here after this break of structure. We had that pullback that stopped just shy of that initial daily supply zone, and then we had another level or another bearish 4-hour bearish leg that formed after price action broke structure here. Now notice how our daily change of character in here, right? Notice how that daily change of character, the break to the downside, could be regarded as a break of structure to this particular 4-hour leg. So if this is my 4-hour leg to the downside, I have my strong high in here, I have my break of structure in here, and then this would have been my weak low, right? Notice how price action, after forming this low, price action never pulled back towards the equilibrium, okay, before rolling over. Now, this is something that does happen when you trade smart money concepts, especially if you use premium and discounted pricing as a cornerstone in how you identify potential trade opportunities. This is something that does occur. But even though price action didn't quite get to the equilibrium before rolling over, notice how as well this particular daily change of character, this break of structure to the downside on the 4-hour, it wasn't a break of structure with the most conviction. Now, the reason I say it wasn't a break of structure with the most conviction is because you can see that after price action pushes past this level, it kind of trickles sideways. We have this price action where we push below 10676.2. Okay, we push below it and immediately push out of it. Now, what this is showing me here, right, is that it's showing me that price action was clearly rejecting. It was clearly rejecting this level, 106.7.2. So because it was rejecting this level, I wouldn't necessarily regard this as a valid break of structure to the downside in terms of this 4-hour context, okay? I don't want to confuse you here. I want to show you an occurrence that does happen often when trading SMC. So we have price action rejecting a strong weekly level, coming in and immediately coming out. We also see a 4-hour bearish leg that never quite reached our equilibrium. So this is where things could get a little interesting on Nasdaq, especially if you're trading the 4-hour, okay? Now, instead of regarding this as a full-on break of structure, instead of marking this out as my new 4-hour lower high, and instead of bringing on my premium and discounted tool and then marking something like this out, okay, I would instead, in a trading session, I would instead leave this particular bearish leg on as my active 4-hour bearish leg, and then I would be waiting to see how price action interacts with this level in here first, okay? Now, the reason I want to wait to see how price action interacts with this level first is because at the moment, this 4-hour supply zone is a very nice supply zone to look for sells from, okay? We do have the engulfing candle that led to a little minor break of structure in here. We have the imbalance. We also have these relative equal highs that were created after price action pulled back and stopped just shy of reaching that equilibrium. So this is a very nice setup for us to look for shorts from. The only difference is, instead of it being a supply zone that we look to short in order to bring price action down towards our week low, remember, this would have been our week low in here before all of this price action. This would have been our week low. If price action were to reach this 4-hour supply zone, right, then this would have been a really nice shorting opportunity to target that week low, all right? However, that did not happen. Price action stopped short. It formed these relative equal highs, and then it rolled over to give us this scenario in here. So instead of now, when price action pushes up to this 4-hour zone, instead of looking for a short that we're going to be aiming very low, okay, this could now become, right, this could now become a 4-hour supply zone that just gives us a small reaction, right, that gives us a small reaction before continuing higher, okay? Now, why do I say it could give us a small reaction before continuing higher? If we drop back out to the daily chart, okay, and if we have a look again at our daily change of character in here, as you can see, this 4-hour zone sits just above that daily change of character, okay? So because we've already begun our bullish pullback here on a weekly and daily time frame point of view, because we've already started that bullish pullback, if price action comes in and mitigates this particular zone, we could potentially see some bearish relief, okay? We could see some bearish relief of this bullish pullback before price action potentially continues a little bit higher to mitigate this before rolling over, okay? However, another interesting thing is, if we are to reach this daily change of character, and if we are to confirm this as our new weekly low, notice how our 4-hour zone, okay, would be sitting just below the equilibrium of this weekly leg, okay? And as you guys know, price action does not always need to trade into premium pricing in order to continue a potential bearish leg, okay? So there is a possibility as well that price action could pull back, mitigate this 4-hour, okay, and then just continue down bearish. The only reason I wouldn't necessarily put too much weight on that particular scenario playing out, all right, that bearish continuation from this 4-hour zone, the only reason I wouldn't do that is purely because of this high volume bullish engulfing weekly candle in here, all right? This looks like a lot of volume that is stepped into the market. And I don't think that 4-hour candle or that 4-hour supply zone that sits in here, I don't think it will be enough to stall this, what looks to be a lot of bullishness stepping into the market and causing price to then turn bearish, right? So I think there is a bit too much bullish volume that's stepping into the market for this 4-hour to be the supply zone that pushes price all the way down. But I do think that this 4-hour zone could be the zone that gives us just a little bit of bullish relief, right? Just a little bit of bullish relief after we see that change of character before price action continues. Now, because I am anticipating that, what you could then do from an intraday point of view is once price action pulls back into this supply zone, okay, what you could then look for is you could look for some kind of entry model to be satisfied in here, right? Maybe on your 1-hour chart, maybe on your 15-minute chart. If you want to go down that low, you maybe want to look for something to be satisfied in here, and then look for a couple of shorter term intraday opportunities to trade the market short before that bullishness steps in again. All right. Now, I hope you guys enjoyed this video. If you did, please leave it a like. Subscribe to the channel so you don't miss out on any future content. I truly appreciate all of the support the channel has been getting lately. Thank you guys ever so much for watching, and I'll see you in the next one.